Stocks are up nicely for the day. Both the S&P 500 above 1%, the NASDAQ 100 almost 2% up. We see the 20-year bonds are down about 3.7%, gold down 0.20%. So let's jump first into the S&P 500 going into the second week of decent up movement. Hasn't crossed over on the price percent oscillator, so no confirmed up move, no weekly vertical crossover yet. Will it happen by the end of the week? Not likely unless things just really continue to bound up. This is just 2 days in to a 5-day candle, but again, looking nice for up movement. We go from the weekly chart to the 2-day chart. What do we see there? Well, we had the weekly chart actually finished drawing at the the 2-day chart finished drawing at the end of the day. And so we do have the latest 2-day candle, which makes 8 days of up movement. However, as we see price movement on the 2-day chart still below that weekly trend line, we had a crossover back on the 2-day candle ending the 9th. That was last Wednesday. And we see the derivative oscillator, price percent oscillator heading up. However, when we look at price movement, we do see things continuing to trend up slowly but surely as far as that 2-day chart goes. Now we go to the 4-hour and we see things had been sliding sideways for several days. Then it bounded up in the morning and up further in the afternoon, again, which shows you the market had digested that sideways slide for the prior up movement, some pretty radical up movement that happened over the course of 4 days. And then sideways for about, about 4 days, and then bounding up this last day. However, we look at the derivative oscillator, still about the same. Price percent oscillator not moving quickly away from the red signal line. So we'll continue to keep our eye on things, see how much longer all this will go up. Now we go from the S&P 500, those 500 big stocks, to the NASDAQ 100, the tech world. What do we see going on there? Well, again, second week of decent up movement. Now, on the NASDAQ 100, it has pushed through the gold weekly trend line. Don't have a crossover yet, but it appears closer to a crossover, which would be a weekly vertical crossover. Hasn't happened yet. And the derivative oscillator is almost green at this point. So we'll continue to watch and see how this week develops. We go to the 2-day chart. What do we see there? Well, we saw a 2-day crossover again back on the 9th, just like we saw on the S&P 500. And then we see on the latest 2-day chart, latest 4 days worth, 2-day candles, again pushing through and staying through the gold trend line for the weekly chart. So again, decent up movement. Now let's look at that 4-hour chart and see what we see there. Again, bounding up in the morning, moving after that malaise, sort of pushing up higher, and things were having a hard time rising above the high back on the afternoon of Wednesday the 9th. So decent to see that pushing through. Up movement in the morning and then more in the afternoon. But the derivative oscillator gained a little bit of momentum, not super strong. Price percent oscillator sort of lagging there, not pulling quickly away from the red signal line. So we'll continue to watch, see what we see. Don't have a trade now on the S&P or the NASDAQ 100. Why? Because, of course, we've got that divergence. The 2 days in an up move, the weekly's in a down move still, so we have to have both moving in the same direction before we can even consider jumping into some move. Now let's go to TLT, 20-year bonds. What do we see going on there? Well, this week, more of a blow-off. Prior week, we had a red open box candle, showed us a lot of slowing, but then this week opened pushing through the weekly gold weekly trend line, derivative oscillators going into its second week of losing momentum, and the price percent oscillator also doing the same, losing a lot of upward momentum. So that's a great deal of slacking off. We go from the weekly to the 2-day, and of course, we now have a confirmed crossover going down, first time in quite a while on that 2-day chart, which again means that we do not have a trade right now. No matter what happens, it'll be at least for a while until we have both the weekly and the 2-day moving in the same direction. Weekly still in a confirmed up move. So again, significant slacking falling off there on TLT 20-year bonds. Of course, the 4-hour chart still mobiling down, down, down. So we'll just continue to watch. Derivative oscillators gain momentum. Price percent oscillator still heading down. So don't have a trade in 20-year bonds as this malaise continues in bonds. We'll just continue to watch and see what we see. That's where we are there. And now we go to gold. Now gold had been a bright spot, down a little bit for the day, 0.20%, still trying to hold on. The problem is we don't see price movement moving above where it peaked out in the prior week. We do have a green up candle. That's good. Price movement is above the weekly trend line. Derivative oscillators gaining a little momentum. Price percent oscillators lost some, but is still heading up. Now we go to the 2-day chart, and that is where, again, even though the price percent oscillator is heading down, derivative oscillators losing momentum, you see that the 2-day candles are still trying to gain some. Of course, the problem is when you start looking at price movement and where it had peaked out previously, back on the 3rd of January, hasn't even hit that now since then. So again, that's why you see the price percent oscillator and derivative oscillator losing momentum, because price has lost momentum. Still above the weekly trend line and still in a confirmed up move, but does appear to be getting closer to a crossover going down on that 2-day chart. But again, we'll continue to watch and see what we see. Now, as you look at the 4-hour chart, see a little bit more telltale signs. Spinning top in the morning and then a red, solid red candle moving down in the afternoon. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. If for some reason gold turns around and bucks up and really starts to gain and crosses over going up, of course, we still have the ability to jump into an up practice trade. Why? Because the weekly and the 2-day are still in confirmed up moves. So that's something for us to at least look for, as everything else is in sort of adjustment periods. But that's where we are. We let the stocks lead us, my friends. We let the charts lead us. And the stock charts are what we chart here every day for you. We ask you to practice with us. We got all sorts of great trainings at the website chartingwealth.com. You want to buy our book, know more about what we do, it is available. You can see links to purchase the book in the show notes. And of course, become a Patreon sponsor. Lots of great things for you there. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.